$895. That's what American Express now charges for the Platinum card. Chase isn't far behind. The Sapphire Reserve jumped $795. Just 5 years ago, the most expensive consumer cards topped out around $550. So what happened? Did these cards suddenly get twice as valuable? Or is something bigger going on? Something that changes who these cards are actually for? Here's the truth about the credit card market's massive split, and which side you should be on. Analysts are calling this the K-shaped credit card market. The top arm of the K, premium cards, keeps climbing. Higher fees, more perks, more complexity. The bottom arm, no annual fee and cashback cards, stays flat. And in the middle, a new tier is emerging. Cards in the $95 to $395 range that used to be considered premium are now mid-tier. The Capital One Venture X at $395, the Citi Strata Elite at $595, the new Atmos Summit Visa at $395. These cards are quietly becoming the sweet spot, and most people haven't noticed yet. The Amex Platinum now advertises over $3,500 in annual value, but here's the catch. Almost all of it comes from statement credits you have to chase down. $200 in Uber Cash, but only if you use it monthly. $400 at Resi restaurants, but only at qualifying spots. $300 at Lululemon, enrollment required. Industry insiders call this the coupon book model. The issuer prices the card assuming you won't use every credit. And according to Bankrate, most cardholders leave hundreds of dollars on the table every year. So who is this card actually good for? If you fly 6 to 8 times a year, live in a city with Centurion Lounge access, use Uber regularly, and would pay for Clear and a Walmart Plus membership anyway, the math can work. The lounge access alone, over 1,550 lounges worldwide through the Global Lounge Collection, is unmatched. Add the $200 airline fee credit, the $219 Clear credit, and the hotel credit if you book prepaid fine hotel stays, and a frequent traveler can easily extract $1,400 or more from this card. That's $500 in net value after the fee. But here's the problem. Most people holding this card don't fly 6 times a year. If you fly twice a year, don't live near a Centurion Lounge, and the credits feel like homework, you're subsidizing the people in segment 4. That $895 fee is burning a hole in your wallet. The Chase Sapphire Reserve at $795 isn't much better if you're not using the $300 travel credit and the Lyft Pink and DoorDash perks organically. The hard truth. Premium cards are now loyalty programs for heavy spenders and road warriors. If that isn't you, you're on the wrong side of the K. And the good news? There's a whole tier of cards built for exactly your situation. The Capital One Venture X charges $395, but gives you a $300 travel credit and 10,000 anniversary miles worth $100. Net cost. They pay you $5 to hold the card. You still get Priority Pass lounge access, global entry credit, and 2x miles on everything. The Chase Sapphire Preferred at $95 gives you a $50 hotel credit, 3x on dining, and transfer partners, including the new Points Boost feature that can inflate your points by 25 to 50% on select bookings. And the Citi Strata Elite at $595 bridges premium perks with a lower entry point. For 90% of cardholders, one of these mid-tier cards delivers 80% of the value at half the price or less. The credit card market is splitting in two, and the middle is where the value lives. Unless you're a frequent traveler who will genuinely use those premium credits, you're better off with a mid-tier card that doesn't make you work for the value. Audit your card this week. Add up what credits you actually used last year. If the number is less than the annual fee, it's time to downgrade. Because in 2026, the banks are betting you won't do the math. Prove them wrong. If this helped, subscribe and hit the bell. New breakdowns every week.